Hey there, traders. Welcome back to today's recap. Today is Friday, August the 8th. So, stating the obvious, the bulls were able to keep climbing inside that breakdown area that we've been watching all week, and they closed pretty strong on the day and the week. But I guess the kicker is that the weekly close came in under last week's high. So, does that mean anything? It could be nothing, could be something. We'll come back to this daily chart at the end of this video to talk about the big picture. First, let's go through today's action based on the levels that we had on the board this morning. Before the opening bell, we had a good amount of levels on the board, including an important zone at 637.52 to 638.20. This was the doorway for the bulls. If they could get through it, they would have a shot at pushing into the former all-time highs. It was also a likely spot for overhead resistance. So basically, the bulls had a fight to get above that. You can read through the rest of the game plan. Same time, we were still very much in the middle of stuff based on timing and what the weekly chart looks like. We talked about the possibility of a pullback. If that happened, the trend line was our first area of support, 632.21, 631.71. That was another zone. Could also catch price if they got that low. So this is what we were working with going into the day. And here's the 1 minute chart of the entire day with some of the levels plotted. The two that we're looking at are the ones that price hit, of course. The bulls could not push far enough into this zone to touch the top. Remember, this is the area that we said would probably act as resistance, and it did. The main thing that I hope jumps out at you is that price reacted at the levels. If you had the levels from this morning, that means you had some of the tools to pull money from the market, trading the E-minis against the SPY levels. And when you trade them by their rules, there's a process to follow. You get close to an 80% win rate over time. So we had two relatively straightforward 4-point base hits. They came up into 636.26, and they pulled back, gave you around 5 points or so in the E-minis. Out of the money doesn't matter. There's a rule to manage trades when they're out of the money. But giving this one time to develop gave you your first official base hit here. There was no recycle trade. That's when price gets on the other side of the level and would come back into it. So first of all, there's a 5-cent buffer. I didn't pull it down toward price, but 636.21 would have been it. But 636.31 would be the level adjusted on the long side. So you want 20 minutes to go by. It had not been long enough. They got down to a penny shy, shot up, and kind of bounced a few times before actually hitting the level. That's a near miss. Plus, it wasn't enough time. I like to see more time go by. So really, at this point, you're not going to consider this level, official level 636.26, for any more trades for the day. So the next official base hit was 637.52, the bottom of the zone. And it was resistance as anticipated. They could not muster enough strength to get farther into the middle of the zone like I hoped they would. So that was the short right there. That's 4 points in the E-minis, playing by the rules. So as you can see, the levels were important. They gave you 2 trades if you were following the process. Here's the recording of the trades that I took. I started the morning by going short at SPY 635.02. Now that's a level that was not on the board in the morning. I just identified it in real time. Price did not respect it at all in the morning, even though later in the day it did prove to be decent support. So I'm short 6 contracts. They continue to climb. I took another position, or I sold 6 more at the level, which I should have done at the very beginning. I should have just waited until price got to that level. So I'm short 12 at this point. And my first loss limit, or my stop limit here to take 6 off, I guess it was 20 points because that's what I have keyed into the system, kind of hit early on here. So I started the day with a negative $4,200. So I didn't get a good start to the day. Still didn't make it up to the zone at this point. At some point, I doubled down and sold 6 more. Also, I'm willing to sell up here, but they didn't get that high. So I'm short 12. Again, they started to roll over. So I was able to erase that original loss and then add a few more thousand to the bag when they came down. So you'll see me, I'm getting ahead of myself here because I'm not short 12 yet, but I know, there we go. Now I'm short 12. Adjusted my profit objective a few times, ultimately ended up being around $7,000 and some change. So added to the $4,200 loss from the morning, I ended up above water. There we go. So at that point, I thought I was done for the day, and I let this go to about 12 noon, and I closed up shop. I just stopped this recording, closed up shop. So I let this go till 12, but later I was at home, and I pulled the charts back up around 2 something. Here we go, 222. Let me just pause this. Explain what I was thinking here. So I saw that they had made it up to the zone, and I was too late for this short at 637.52. So I kind of flipped the logic and figured that they might climb deeper into this zone. So I went long with 8 contracts. You see the limit order there. And I added 2 more when they dipped a little bit. So now I'm long 10. I just waited, and they really couldn't muster enough strength to get into the middle of the zone, but I was able to peel off most of that position for good profit. Then I got stopped out on that 2-contract trailer. So I'll scrub ahead here to show you. Took a little bit. There we go. So they came down and never went any higher than this. So that was my second trade of the day, and I really should have just played by my rules, made it simple, would have had a lot shorter day. But I'll let this go until the end of the day. Those were my trades for the day. Here are the logs, the PBR, playing by the rules. 2 base hits, pretty straightforward, 8 points at a minimum. So actually each day this week, except for Monday, we had 8 points. So not a bad average. And the year-to-date metrics are looking pretty solid. Sam's trades, a little more complicated. You could read through the notes if you want. Not all trades were exactly 10 contracts, as you know, but just for tracking purposes, since my little quantity of ES contracts traded, this table here stops at 10. I lost 10 points and then gained 19.2. It was 45.60 before commissions. And actually, commissions were higher than usual thanks to over trading, but I'm not complaining. Back to the daily chart. So above the trend line, closed strong on the day and the week. The bulls are keeping the trend alive. So maybe the trend line has served its purpose for the time being, at least. So if I were looking at this pattern, say on an hourly chart, I'm talking about this drop and then it's stair stepping their way back up. This is a bearish consolidation typically. If I were looking at this and it was an hourly chart, I saw this bearish consolidation forming in the middle of nowhere, like not at an extreme like we have now, I'd be looking at reasons to short near the top. So like in this case, I'd be shorting somewhere around maybe 638.50 to 695, 639.50, somewhere toward the top. And I'd be wrong if I had an hourly close above the high of this. But the difference here is that we're at all-time highs again. So that attracts a different breed of trader, kind of the breakout buyer. So if they break 640, yes, we might see a quick spike higher. But that weekly candle from last week still is on my mind. If that's a true reversal candle, we could see pullbacks soon, maybe starting with the futures like Sunday night into Monday. I'm not saying this is going to happen. Either the bulls take it to new highs and they play around up there for a while, so there's some destination higher, or the bears get their timing right and turn this thing into the start of a trend change. I'm not suggesting that anyone go out and start buying puts on everything. It's just my opinion. So for now, the bulls are still running, but I'm keeping an eye on the bigger picture. It won't change how I trade the E-minis with the Ticks&Trades approach, a scalp trading approach, but it's just always good to be aware of the possibilities. So that's it for today's recap and for the week. If you found this helpful, hit that like button. Consider subscribing so these recaps will be handy and timely. And check out ticksandtrades.com to see how you can get access to the daily levels and the game plans if you are interested. Thanks for your time and thanks for watching. I'll talk to you again soon.